Okay, welcome to the Chapter 15, Section 2, Analyzing and Recording Purchases on Account presentation lecture. Please make sure that you have the notes that was posted in Classroom so that you can follow along and continue the notes that you ended after we completed Section 1 in the previous presentation lecture. All right, so analyzing these and recording purchases on account transactions. When we analyze purchases of assets on account, this is the merchandise that is needed in order to make our product to sell to the customer. So we have the accounts payable subsidiary ledger, which is where we are going to list all of our vendors or all of our suppliers. Each individual supplier we owe a certain amount of money to. The sum of all of those, which is known as the accounts payable controlling account, is going to equal the balance of all of our subsidiary accounts payable accounts. So in this example, we have 4 vendors or 4 suppliers that we are doing business with: Sandals, etc., Shoe Warehouse Inc., and then also Store Supply Shop. We owe all of these different vendors different amounts of money. So we owe $900, $2,100, $1,000, and $500 to each of those individual suppliers, totaling $4,500. That then becomes the balance of the accounts payable controlling account, which is a summarization of all of our liabilities. Okay. Now, let's say that we have purchased merchandise and we did it on account. So on December 14th, let's refer back to the invoice that we received from ProRunner Warehouse for $2,300 for those items that we needed. We have the different soft cushion shoes, white and black, and then also the low cut black and white. On December 14th, On Your Mark purchased $2,300 in merchandise on account from ProRunner Warehouse, invoice 7894. So if this is the source document with the discount terms and everything in it, how are we going to transact this particular invoice? Okay. Well, let's break it up into T account format first. In this situation, we are going to debit purchases for $2,300 and we would credit accounts payable for $2,300. Now we would also then have to credit in our ledger ProRunner Warehouse, because they are one of our subsidiary accounts, to our accounts payable. But nonetheless, $2,300 debit to purchases, $2,300 credit to accounts payable. The transaction is equal and it is transacted correctly. If we put it in the general journal, we list it this way: purchases debit $2,300, accounts payable / ProRunner $2,300. This slash in the post reference column indicates that this number right here, this 2,300, is going to get posted into 2 places. It gets posted into the accounts payable controlling account and the ProRunner subsidiary account. Invoice 7894 is our source document. Demo problem 15.1. If you haven't already attempted this, and actually this is a problem that we had already gone through in class. We did it after section 1. So just as a review, you can take a look at this, review it back with what we did in class. We're not going to spend any time on it here in this presentation lecture. Part B. Now, this is one that we will be doing next time that we meet in class. On April 10, Hoyt Corporation received invoice 214 from Lang Office Supply for supplies bought on account. So with this transaction, how is it going to look? First, answer the 2 questions. Which general ledger account will be debited? Since the supplies were bought on account, which accounts will be credited? And then use the T accounts to show the debit and credit parts of this transaction. Give this one an attempt on your own, and then when we get back into class, we will be looking at it again and practicing it together as guided practice. All right, recording the purchase of merchandise on account. Let's take a look at an invoice that is placed and needs to be processed on the due date. All right, so we have a purchase that took place on December 15th. On Your Mark received invoice 3417. It's dated December 13th from Champion Store Supply. We bought it on account, $1,200, terms and 30, which means payment needs to be received within 30 days of the processing date, which is December 13th. So here's the invoice, $1,200. Now we can go ahead and process this bad boy for payment. If we do this, we have to first determine which accounts are affected in T accounts, and then we will journalize. So store equipment is what we had purchased, $1,200. Accounts payable, because we're paying for it on account, is credited for $1,200. And we credit our subsidiary account, which is the vendor that we purchased from, which is Champion Store Supply, for $1,200. So even though there are 3 accounts in the T accounts, theoretically only 2 accounts are affected with this transaction once we journalize it. When we journalize it, we are going to debit store equipment for the amount of $1,200. Then we are going to credit both accounts payable and Champion Store for $1,200. So when this gets posted, it's a $1,200 increase to accounts payable and a $1,200 increase to Champion Store. Invoice number 3417 is our source document number. Problem 15-2, go ahead and give this one a try. We have a couple of different this is a problem that we're going to be doing in class, I should say, next time we meet, journalizing some of these transactions on account. So if you want to go ahead and take a look at some of those and attempt some of those, feel free to do so. Otherwise, we'll be practicing next time we meet. Purchase, returns, and allowances. Purchases is the controlling account. Purchase returns and allowances, actually anything that's returned or a purchase allowance is recorded in the purchase returns and allowances account, is going to be a contra account to the purchases account, which means it has opposite characteristics. So a purchase return is when a business returns merchandise to the supplier for full credit. So we receive something, isn't what we wanted, it's defective, we return it. A purchase allowance, business keeps less than satisfactory merchandise and pays a reduced price for it. So it is what we ordered, but it might be damaged, but we're going to keep it anyway, therefore it's an allowance. So the purchase account, as you remember, debit side, balance, increase side, debit, normal balance side, debit. Purchase returns and allowances is just the opposite, credit side, normal balance, and then making the credit side the increase side. If you want to decrease the purchases account, we credit it. If we're going to decrease the purchase returns and allowances account, we debit it. Remember back in chapter 14 when we talked about credit memorandums. Well, if we are going to return purchased merchandise to a supplier, then we are going to process a source document known as a debit memorandum. This notifies the supplier or a return or to request an allowance. In this case, we are going to return 5 pair of athletic shoes at $40 a pair for $200. Now, with this being the source document, how are we going to go ahead and process this and then also record it as a transaction? Well, let's take a look at another example. This is another debit memorandum indicating the same amount. On December 16th, on your mark, issue debit memorandum number 51 for the return of the $200 in merchandise purchased on account from Fastlane Athletics. So if we go back, this is the debit memorandum for a supplier, and then the next slide, this one here, now let's go ahead and set that thing out because we do have to request either an allowance or request that we be able to return this merchandise. So with this particular source document, here's what the transaction is going to look like. We are going to debit accounts payable $200 because that is the amount of our return. We then are going to credit purchases, returns, and allowances for $200. We are also going to have to debit for $200 the accounts payable subsidiary ledger account, Fastlane Athletics. So here's what it looks like in T account form, what's going to look like in the journal. On December 16th, we debit accounts payable, Fastlane Athletics, $200. We credit purchase returns and allowances, $200. Debit memorandum 51 is the source document. Again, remember, in the post reference, the slash here indicates that there will be a posting to the accounts payable controlling account, as well as the Fastlane Athletics subsidiary account. Here's how the posting is going to look. In the general journal, here's the transaction. So we will post $200 debit to accounts payable here. We will also post $200 debit to our subsidiary account, Fastlane Athletics, here. We will then also post the $200 credit to purchase returns and allowances in the general ledger here. Notice the different colors of the ledger forms. The green indicates general ledger, whereas the pink indicates subsidiary ledger. That concludes the presentation lecture for problem 15, or I'm sorry, for section 15.2. Please go ahead and give those demo problems a try, and we will be working on them next time we meet in class as guided practice, along with some independent practice problems. Make sure that you have also completed the notes for section 2. I will see you next time we meet in class, and I will see you next time for the section 3, Analyzing and Recording Cash Payments, section 3 presentation lecture.